Might be Stanley Wexler doing business as Domino's Pizza. We can do that. We can set up corporations or even single proprietorship. But every business is going to need an EIN. That's an employee identification number. It's just like a social security number for a business. So every one of my businesses has separate EINs because all communication with the federal or state or local governments must have that number on it.
Is that like the tax?
Oh, you'll use that on your taxes. Everything is going to have that EIN on it. Okay. Of course, sole proprietorships, you have total control. You keep all the profits, but you also have all the responsibilities. You have to do all the hours. I'm not interested about the profits being taxed, so that we won't talk about. And of course, the sole proprietorship has many disadvantages. It has to be all your money. Sure, you can still borrow money. And there are limited human reasons. There's only so many things you can do. And in my businesses, I did a lot. So, especially in businesses that were around Christmas time, I literally worked 20 hours a day, every day, for about 2 months. And we'd go home. It was interesting days, because when I would go home, I'd get home about 1 o'clock in the morning. I'd sit on the floor for about 2 hours, counting all the money, putting them in vans. Yeah, getting the deposit ready, really. And then I would sleep for about 2 or 3 hours and then get up and start the whole day again. Okay?
Qué bestia. O sea,
A sole proprietorship, though, generally has the limited life of the owner. Because when the owner passes on, usually there's nobody willing to do that kind of work or continue that kind of work ethic. So usually a sole proprietorship dies when the owner dies, generally. Okay? Any questions on a sole proprietorship? Okay, general partner, partnership, we've talked, there are 2 types of partners. What are the 2 types of partners? What's one of them? Fabiana, what's one of them?
wow. Wait.
Sorry, if you don't remember, you don't remember.
Limited?
Limited?
General.
Limited partner is only limited to the amount of money they invest that they could lose. General partner is liable for everything. So if all of us were general partners of a business, we got into trouble for $1 billion, and your portion was 100 million, and yours was 100 million, and we did all that. But all of you went to Antarctica, and I can't find you. I'm the only one who's left. I'm responsible for all billions. A general partner has unlimited liability. And of course, one of the biggest partnerships of all throughout the Western Hemisphere is this thing called marriage. And of course, more than half of them fail. So be careful of your partners. Yep.
What's the advantage of being a general partner?
You are in control. You set the policies, the procedures. You're the one generally who says, I really know what I'm doing, and I'm going to make this successful. And you don't want any interference from others or other general partners that you already are in sync with.
I was going to say, a limited partner is usually like an investor, right?
Yes, general. Mm-hmm.
For a company like IBM, is there like a overall owner of it, apart from like the CEOs and the
Corporations are owned by its whom?
shareholders?
Shareholders, stockholders. So management of IBM owns very little, mostly owned by individual shareholders or institutions representing other shareholders.
Doesn't the company offer a lot of shares when you get employed in IBM, or no?
Sure, that I think you're an exceptional worker and I want you here, I'll offer you $200,000 a year to start, and at the end of the year, I'll give you stock options for 5,000 shares maybe. So stock options are an incentive for employment for somebody who's a valued employee. Okay. So partnerships, we've already talked about it, unlimited liability, disagreement. To set up a corporation is pretty easy. You send to the state articles of incorporation that explains where you're going to be, who the president is, all that. You're going to send the corporate charter saying the way you're going to do business. You're going to fill out those documents. You're going to send the bylaws that says you're going to have meetings every 7th day of the 5th month of the 3rd year when the frogs are out. Whatever you're going to do, you're going to lay it out in there. You're going to tell the state who your board of directors are, and then how much stock you're going to issue if you are going to issue stock. Once the state gets that information, you're going to do research to see if the name that you want for your company has already been used. And if the name has been used, you're going to get a letter back saying this is unacceptable, change the name. So after that name search, when you are a unique name for your business, then you'll get this will all be granted, you'll get a letter back from the state of Florida, and then you'll be given a seal. A seal, and I'm not talking about something going, you know, just making sure you knew that. Whoa, what came in? It's wet, it's in a box, and it has a bathtub. No, it is a press. Looks like a pair of pliers almost, but it has a big round circle in it that has your name of your company and the seal of the state, so that any official documents, you sign it as president or whatever you are, and you put the seal on it, and the seal says this is official. Okay, that's what a seal is. So corporations, was there a question here?
Sounds like a trademark.
In a way, it's a trademark. It's not really. It's a symbol that this document is recognized by the state of Florida as coming from a corporation that has been duly recognized in the state. A closely held corporation is somebody where the public doesn't own the stock. So all my companies really had stock, but I owned it all. Nobody in the public ever bought it. IPO, you should know everything about IPOs because we've done that several
You
times.
always own all your stocks in
Yes,
business?
correct. I never had any, none of my companies were public.
Oh, but you had other investors, right?
Did not have other investors,
You own 100%?
100%.
What about, the big, maybe supermarket there?
Well, Publix, I think is still privately
Yeah,
owned.
they got someone,
Yeah, it's a privately owned company. There's no,
but they offer shares to their employees.
yes, because what you can do is offer, it's still closely held by employees, so they get shares by being there for a long time. I don't know exactly how they're doing this, probably merit type awards, but I don't know for sure.
None of those shares get paid out if the company gets sold?
The answer is yes, if you're a part owner of something, but you can have shares in something and not own it. You can have, in essence, representative things in terms of profitability, how we're gonna split, or if you get extra money. We could do a lot of things
If
there.
you go from one private equity firm to another, your shares get paid out, and you have shares.
If you are selling your company from one firm to another, absolutely.
So if we decide to buy the outstanding shares of 30 million, buy all 30 million, the company's yours?
That's correct. In fact, you don't have to buy all 30 million. All you have to do is buy 51%. I tried to do that many years ago with a company called Centigram. They had 4 million shares outstanding. I needed to buy 400,000 shares. And at the time, I was maybe 28, 29 years old. So I needed about $4 million at the time, and I was short $1.5 million, I remember. The guy next door said, I want to take over this company, but we need another 1 million shares. I'll take care of the rest. He didn't want to do it, and the reason I wanted to do it was this company had $10 a share in cash in the bank and no debt. And so this company, I knew that stock was going to go way up as soon as somebody realized and knew what I knew. And the way to get people to know what I know is to file what's called a 13G Williams Act filing. So as soon as I took this percentage of the company, then you're required under law to file that Williams Act filing. But I wasn't able to do it. It turned out it didn't matter, because a couple days later, the stock was back to almost $13 and made 30% in a few days. Of course, I'm stupid. If I waited a few more days, it went to 20. It would have made 100%. Stupid. Corporations are easy to set up. Today, you can do it online. You can do it through places that are on there. So, I mean, you can do it through, I forgot the name of the company now. But you can set up companies online if you want to. Most things you should do as companies, because you have limited liability, as long as you're not doing fraud, so long as you're not purposely being dishonest. If something goes wrong, and you're an individual proprietor, sole proprietor, we're gonna sue you, you'll never work again. But if you have a corporation that something went wrong, then the only thing that people can sue you for are the assets of the company, not what you own personally. That's why it does afford protection by owning corporations. Yeah.
The CEO owns 40% of company, like in stocks. Then you have the other 60% is like a bunch of investors that only own like 5% each.
Right.
Would you be the one that's like technically not owns the company, but
You do not, you're the majority shareholder, but you're not an owner. So what happens is, if I disagree, whether if you're running the company, as you were, and I don't like what you're doing, I'm gonna proxy the others and try to get more people to join me in what I wanna do so I can get rid of you. So as long as you don't,
Trying to
the
gather
law-
60%.
yeah, the story, long and short is this. Anybody, if you own less than 51%, you do not have control of the company. 51% or more, you have control of the company.
Didn't Warren Buffett buy out like 100 million of Apple's shares or something?
Well, he did own Apple for a long time. I don't know if he still owns it, but sure. Okay, an LLC is a limited liability corporation. That's another type of corporation which became popular maybe 20 years ago. It's limited liability means, like a corporation, your liabilities are limited, provided you don't do anything illegal. And the other term, one of the terms that was there was a franchise. A franchise is a right to sell some other company's product, provided you follow the rules. I used to own, one of my companies was Burger King. I owned several Burger Kings for a long time before I sold those. So, a franchise, you must follow the rules of the franchisor. I was a franchisee, okay, because I owned it. And then you have to follow the rules, pay the royalties, do all the things that you're told to do. That's a business that was very lucrative 30 years ago. And then I saw, because of competition and knowing what I know about business, this was not going to be a good business in the future. And that's why I sold it before it became a problem. Today, they are problems because of the cost of doing business.
How much did you pay in royalty? Like 8% of the
I don't remember exactly. I think the royalties were 8% of sales and 2% for advertising, but I could be wrong. I think there was another 4% in product development. But I don't remember exactly because I'm going back 35 years to 32 Okay. Operating capital is the capital you need to run your business every day, to pay your wages, electricity, fixed expenses, expenses that don't change. So your rent isn't going to change. Your labor is going to change if you have a season like Christmas, like one of my businesses. So during Christmas, I'm hiring 100, 150% more people than I normally have. A variable expense is that, when the expenses change. Balance sheet, that's why you should take the accounting class. I'll do a little bit of accounting at some point, but not much. You should know assets equals liability plus equity. In personal finance, we did it as net worth, which was equity, and it's assets minus liabilities. It's still the same equation. Okay? Cash flow. Cash flow means what happened to your cash during the year. So, is it possible to make $1 million in your business and have no cash at the end of the year? And you're going yes, and you're correct, but why?
Because expenses.
No, then you haven't made $1 million. I'm talking about real profit.
Can you say the question? Because it's not in cash, it's in assets.
It's in other assets, that's exactly right, well done. It's in other assets, it could be an inventory, I might have bought a supercomputer, okay, with the money. So I may not have it in cash, and that's what cash flows tell us. Reserve capital means, just like your personal balance sheet, you should be keeping how many months in cash?
9 months, I
Did we
think,
talk about?
of liquid
Correct,
assets.
6 to 9 months. Okay, but a business should always have cash available. I'll come back to you 1 second. Projected statements, I always, on every one of my businesses, sat down and I said, this is where I want to be for the year, this is what I intend to do, this is where my money's going to be, this is how much profit I'm going to have. I always project the statements, and then as I'm going through the year, if I see there's any problems, I'm going to deal with them, maybe make some changes. Sources of capital are yourself, home equity loans, banks, venture capitalists, all kinds of other things that we will do are sources of capital. But if you go to a venture capitalist or an angel investor, they want part of your business. Okay? And I never did that with any of them. I was always self-generating the capital I needed for businesses. Yeah.
Isn't cash flow the money that's like going in and out of a business?
The answer is yes, but that's what you're keeping track of.
Yeah.
So in this case, if I did a cash flow statement, a
It's
net
how you make it
income
a point.
statement would say $1 million. But if I went to look for that $1 million, it may not be there. Why? Because on my cash flow statement, I'd see I invested $1 million on a new supercomputer. Therefore, I have no cash at the end of the year.
Okay, but then what's the significant, like why is it important?
Okay, if I'm evaluating a business to invest in, and you look at the balance sheet and see no cash, you might panic. If I look at that same business and look at the cash flow, I'll realize they made $1 million, it's just that the $1 million is tied up in inventory.
Okay.